Hello, in this presentation we will work short calculation test type questions that will be in the format or could be in the format of multiple choice or short answer questions, but will include some form of calculation. We will be working with concepts related to debits and credits and recording transactions using debits and credits. First question. Store opened the current year. The following transactions occurred and were recorded in the company's books. We're going to find net income. So this is going to be our list of transactions. We're going to have to go through this list of transactions and find what net income should be. Note that when considering net income, we're thinking about revenue minus expenses, the calculation. When looking at a problem like this, it would be most advisable to write down the debit and the credit as we go through this so that we don't make an error. That's what the double entry accounting system is for. But due to the interest of time, as we're mainly usually taking test questions here, then we could do this a bit more quickly by just trying to find those pieces, those components that are related to the calculation of net income, those components being revenue and expenses. In order to work this problem, we can put revenue and expenses on the left-hand side and work through these and see if we can just list out those components that will be related to revenue and expenses. So we've got owner invest $42,000 cash in the business. If we think of the journal entry, we're going to debit cash. Cash is affected. It's going up with a debit. And we're going to credit capital. Capital, you might think should be income, but no, it's not going to be income because we haven't earned it. The owner just put the money in. Therefore, those are not revenue or expenses and therefore not involved in our calculation we are looking for here. Number 2. Owner contribute $117,000 of equipment to the business. Transaction there, we're going to say equipment is going up with a debit, and we are going to credit the owner contributed it, so we're going to credit just the capital. Once again, neither of those though being revenue or expenses, so not involved in the calculation we are looking for here. Next one. The company paid $3,700 cash to rent office space for the month. So is cash affected? We're going to say yes, cash is credited. And the debit then going to office space, office rent, we would say. So I'm going to list that here. That is going to be an expense. We'll say rent expense. Now I'm going to put two columns. I'm going to put that in this column, and then we're going to sum them up in the outer column. So we're going to have rent expense. And company paid rent of $3,700. Next component we had, let's see, number 4. The company received $33,000 cash for repair service provided during the month. So apparently we do the repairs. That's what we do. Therefore, we received $33,000 debiting cash. Did we do the work in this time period? Said we did the work during the month, therefore the credit would be going to revenue. So we're going to go ahead and say we have revenue, and maybe it's best just to list the number here of when we earned it. That happened on number 4, $33,000. Number 5 says company paid $7,900 for salaries for the month. We would then credit cash being paid, us needing then to debit something. We paid for salaries, therefore we're going to debit salaries expense. That will be a component here. So we've got salaries expense and the salaries expense 7,900. Number 6 then says the company provided $4,700 of services to customers on account. So $4,700, we did not get cash. We got an IOU, that being accounts receivable, debiting accounts receivable, then crediting. Did we earn it? Yes, we earned it at this point. So we're going to credit revenue. So I'm going to put that in revenue. I'm just going to list it as that happened in transaction 6, $4,700. Transaction 7 says the company paid cash of $2,200 for monthly utilities. So cash is going down. We paid cash. We're going to credit cash. Then we're going to debit something. We paid utilities. So we're going to debit utilities expense. Utilities expense. That's going to be for $2,200. And then number 8, the company received $4,800 cash in advance of providing repairs service to a customer. So we got cash. We're going to debit $4,800. We're going to credit, you might think, revenue, but we got to think under the revenue recognition principle, have we earned it? And we're going to say repair service, advance repair service. We got the cash in advance. So we haven't yet earned it, is the point here we're trying to get at. So therefore, we're not going to credit revenue. We're going to credit something else. It's going to be unearned revenue. That a liability. That not something that will be either revenue or expenses. Therefore, not something we will be putting in our calculation at this time. Number 9. Owner withdrew $6,700 for personal use from the company. Cash is going out of the company. Cash then credited. We will debit something. And the debit, not an expense, kind of like it's withdraw. Withdrawal will reduce equity, but is not an expense. So I believe this is all we have here. So I'm going to go ahead and sum these up. I'm going to sum them up in the outer column. So I'm going to bring this down. I'm going to sum these two up. So we're going to say the two revenue items happened on 4 and 6, 33,000 plus 4,700, providing us with total revenue of 37,700. Then we have the expenses, the rent, the salaries, the utilities. Here, I'm going to indent that. That's a subcategory of the expenses. We'll bring them out in the outer column. I'm going to say the expense of 3,700 plus 7,900 plus 2,200 provides us with total expenses of 13,800. Net income then calculated as revenue, 37,700 minus expenses of 13,800, giving us net income of 23,900. Note the format here is kind of like in an income statement format. If you work it that way, it might be easier to list the information out just basically as you would kind of see it in an income statement, meaning you got your subcategories, you've got your indentation of what is happening within there, you sum them up to the outer column, and then subtract out the outer column, that then being the revenue minus expenses to get your ultimate net income. Note that when you look at a multiple choice question, they're going to have every combination of these numbers in there, or any reasonable combination. So you want to make sure you're kind of you're going through this well and recording this down. If you have enough time, it would be useful to record both the debits and credits for each transaction, and then determine if they have any income statement accounts, any revenue or expense accounts. That will eliminate the likelihood of errors. Next question. Company received a $720 utility bill for the current month. It is not due until the end of next month. What will the journal entry be? So we got a utility bill, meaning the utility has been used for the current month, but we're not going to pay the utility for next month. What will the journal entry be? First, we're going to consider, is cash affected? And we're going to say, no, we got the utility bill, but we haven't yet paid it. However, we have consumed the utilities for that time period for the month. Therefore, we need to record something. We're going to record what did we get. We got utilities usage, and therefore that's going to be typically an expense. So you can think of utilities expense. Expenses always have debit balances. They typically only go up in the debit direction. So we're going to increase utilities expense with a debit. A debit. Utilities expense is going to go up 720 in the debit direction. We're going to need to credit something. That something not being cash. We have not yet paid cash. Typically, if we haven't paid cash, if we purchase something on account, the credit will go to accounts payable. Accounts payable. Note that if you already put what you got here, then the payable, you know it's going to be a credit just because you had to debit the expense. That will always be now, even if they don't give you the number, you probably still want to put a number. I usually just put 100 there just to have a number in the debits and the credits. That will help you to record what the debits and the credits are. When you record to the liability, though, you do want to double check yourself and just kind of think through. Liabilities then have a normal credit balance. We're making the bad thing go up by doing the same thing to it, which in this case is another credit. So we're increasing the expense, decreasing net income, and increase in the liability. Note that a multiple choice question could ask this in multiple different ways. They might ask you just for the debit. That might be their answer. They're like, well, here's the debit, or we debited expense, or we credited expense, or we debited accounts payable, or we credited accounts payable. If they do that, make sure to write out the entire journal entry just so you don't make an error and actually accidentally go the wrong way because of not using the double entry accounting system, because of not checking debits and credits and having them be equal. They could also ask you what is the impact on something like net income. And we know that utilities here is an expense, and that's going to increase the expense. Net income calculated as revenue minus expenses. Therefore, an expense going up brings net income down. They could ask you what happens to a liability account, and we could build this journal entry without double checking that this is increase in the liability, and then want to go back and say, well, liabilities as a credit balance, we are increasing it with another credit. Next question. The owner started the business by investing $49,000 cash. What is the journal entry? When we consider a question like this, if it is in multiple choice format, note that they could give you answers that only basically give you half of the journal entry and just one debit or one credit. And some types of this type of question may not even give you a number and just tell you what's being debited and what's being credited. To answer these questions, highly recommend writing down the entire journal entry, no matter what the questions list or the format of the answers, and then looking for those components of the answers that are correct. The double entry accounting system will help to make sure that that you're not making an error or reduce the likelihood of making an error. When considering this journal entry, we'll first ask our questions. Is cash affected? We're saying that the owner deposits cash, so we're going to say yes, cash is going into the business. Cash has a debit balance. We're going to increase it by doing the same thing to it, which in this case is another debit. So we're going to debit cash, and then we're going to credit something, and we need to know what that credit will be. Who put the money in? The owner put the money in. Therefore, we're going to credit the account if it was a sole proprietor of capital or owner capital. And if it was a corporation, it would be someone was selling stock, so it would be crediting like a stock purchase, so the common stock would be credited. We already know that we're going to credit the capital in this case because we debited cash. That's why we debit cash first. But if we were to double check it, then we would say that capital has a credit balance. It's a credit balance account. It is going up. Therefore, we will do the same thing to it, which in this case will be another credit. I highly recommend if we're doing a multiple choice question, you really want to make the whole journal entry here and then go through those choices and see which of those choices have one or more of the components that are in our journal entry here. This journal entry having the debits and credits will lower the likelihood of making an error.